You see a lot of fair value gaps and you ask which one to take. In this video, I'll show you one simple step that is going to filter out all of the fair value gaps that don't work and only leave the fair value gap that works. It's a very simple and easy step that can be done in less than a minute, yet a lot of people overlook it. Let's get into the charts. Now, taking a look at this price action, again, you have a lot of fair value gaps. This is a 15-minute chart. And you always have this question, oh, which one do I use? A bearish fair value gap here, getting disrespected. The bullish one is giving a small move. And then price coming lower, actually coming to this fair value gap. How do we trade only the fair value gaps that are high probability with only one step? Simply, what are we going to be doing? Now, let me show you this. We are on the 15 minutes. How many fair value gaps we see? I mean, if we started from, let's say, this day, right? We can see fair value gap here. Another one here. There is one that was disrespected here. Another one here. And then a lot of other ones all the way below. There is a bullish one get disrespected. You get overwhelmed by the number of fair value gaps that you're seeing, and you're asking yourself this question: is there a trick or something that I can do to filter out the bad fair value gaps? And yes, there is a very easy step that we can actually apply here and only focus on the high probability fair value gaps. Those fair value gaps are going to be the one that are going to be followed by expansions. They're the one that are going to give us those displacement moves. So we're not going to be trading those small fair value gaps, which is, for example, this one. It's not going to be a fair value gap that give us a pullback or retracement. Is going to be always an expansion. So now what is this? Simply, before that, I want to show you, if we apply the fair value gap indicator here, we can see how many fair value gaps we have. So taking a look at this price action, for example, from here to here, this is the number of fair value gaps that we're having. A lot of fair value gaps, and you'll definitely get overwhelmed. Now, disabling the indicator, I don't want you to use no indicators even for fair value gaps, because again, it's going to make you confused by enabling and showing all of the fair value gaps available. We know that not every fair value gap is a high probability. We're going to focus only on the high probability ones. Now, some people would say, oh, we look for fair value gap that broke structure, and that's partially correct, but there is something that is more into it. In this price action, I would simply do one simple thing. We are on the 15 minutes. The only thing that I will do is go to a higher time frame. A higher time frame is relative, so for any time frame that you're looking for entries and fair value gaps, I would simply switch to a higher one. So for example, in this case, we have 15 minutes. I'm not gonna go really to daily and weekly and monthly. No, I'm gonna stick relatively higher to the 15 minutes. Let's do 1 hour or 4 hour. Let's start with the 1 hour and see what is going on. And I'll show you how 1 minute switching to another time frame is gonna save you from falling into a lot of the bad fair value gaps, and it's gonna only make you trade the high probability ones and the one that are followed by displacement and expansion. Now, this is the hourly chart of the same price action that we're seeing. Now, relatively again, this time frame is a higher time frame relative to the 15 minutes. Now, take a look at this. Look at the number of fair value gaps that we're having, much less fair value gaps. So for example, marking this fair value gap here, this is one fair value gap. That's the extreme. And I'm going to also give you a hint on which fair value gaps to mark. And this is something that I've talked about before. We have another one here that is also an extreme one. We also have one here that's an extreme. Those are the 1 hour fair value gaps, right? So we have much less number of fair value gaps compared to the 15 minutes. On the 15 minutes, we had a lot of fair value gaps here because we're trading the 15 minutes. We don't want to stay on the 1 hour, right? So on the 1 hour, those are the fair value gaps that we're seeing. And what do you notice? Actually, that's where price get respected. You see this fair value gap respected here. This fair value gap, we had a nice move to the upside. Also here, from this hourly fair value gap, we had a respect. From this hourly fair value gap, we had respect. Now, what we are going to do is go back to 15 minutes. Now, take a look at what's this 1 minute have done to us, okay? So it's only 1 minute of extra work going to the 1 hour time frame, and look at the difference here. So we had this fair value gap now. Since this fair value gap is now part of a higher time frame fair value gap, then that's not a high probability one. You see? Now, because this fair value gap was very close to the 1 hour fair value gap, so if it's not inside of it, but really close to it, we can also actually count on this. But there is another fair value gap that is where? Inside of this, which is this fair value gap. This is also a high probability one. And you see, that's where price actually reacted for the first time, going all the way there. Now, again, the same logic going where? To this fair value gap. You see, we had a lot of fair value gaps, even bullish fair value gaps here on the 15 minutes. Another bullish fair value gap above it, somewhere in here. We have some bullish fair value gap inside here. All those fair value gaps are low probability. Why? Because they're not part of another higher time frame fair value gap. But this one, you see, actually taking a look at this was an hourly fair value gap. Now you ask yourself this question: oh, do we actually have another 15-minute fair value gap inside of it? And yes, now we're basically taking the high probability 15-minute fair value gaps as well as refining those fair value gaps. So you see, that's our 15-minute fair value gap. Inside of the hourly fair value gap, that's your high probability one. You see, price respected that, went lower. Now the same question. You see, we had a lot of different bullish fair value gap here, bearish one. Those ones you could actually trade from after price trading into your main fair value gap. Because now what it's going to do is going to confirm your bias. Price going lower, right? And then break a structure here. You have this fair value gap. So you could have traded this one. But mainly, this is your main fair value gap, which is part of the 1 hour fair value gap. That's where the expansion is going to happen. Now take a look at this again. On the 15 minutes, how many fair value gaps we have? Now we see we have this fair value gap that was the extreme one. Price rebalanced the fair value gap immediately. So it was not an hourly fair value gap. But take a look at this. This is our 1 hour fair value gap. However, on the 15 minutes, we have 1 fair value gap, 2 fair value gap, 3, 4, and then keep counting, right? 5, 6. A lot of fair value gaps. A lot of people get confused about, oh, which one do I go with? And some people entered from this fair value gap. As you can see, there was some selling pressure here, but it did not last, and then price started going higher. Where is the right or the real fair value gap to trade from in this price action leg? It's the hourly fair value gap that price came back to. And you see, as price come into this fair value gap, now what you could do is this. Where's the 15-minute fair value gap inside of it? We actually have this one, as well as this one also. There is a small one and another small one. However, why this one? Because we could actually see the overlapping of this inside of it, or also the overlapping of this low very close to it. So you see, that was the hourly fair value gap. We have the overlapping inside of it. We could actually count on this. Now price started going lower. Applying the same logic on any chart, which is basically going to a higher time frame, and it's all relative. So even if you're trading with 1 minute, you could do this with a 15-minute. Trading with 4 hour, you could do this with the daily and the weekly, and then it keeps going on and on. So you could apply the same market makers model time alignments with this, and it's still gonna work. But make sure that you go 2 time frames higher than the one that you're using. So if I'm looking at the 1 minute, I would go check the 5 minutes, 15 minutes, and maybe the hourly. Those are the time frames. I'll be checking if there is a fair value gap inside. Now, what is the advantage of this? Why is this gonna give you high probability setups and high probability fair value gaps? The first reason is basically we're trading off a higher time frame PD array, where a lot of people would tell you, oh, actually, because you're trading in a 15 minutes, you got to look at the higher time frame PD arrays. But by doing this, you're basically already checking at those PD arrays already. Now, another advantage of this is that even if you were against the bias, the trade could still work. So the bias become less important in this case. Why? Because it's part of the bias that you're looking for your high time frame PD arrays. It's already part of the bias. And then another thing is you only participate in the big moves or the expansion moves. You really don't participate in those small moves where there is a pullback and the price go lower. So you're not participating in this. You're actually participating on the big move here. So not this small move, it's actually this big move because we're looking at the higher time frame. Now, in the first example, we went from 15 minutes to 1 hour. Now we could do the opposite here, and I think it's going to be much simpler in this case. Now, let's say you want to trade with a 4-hour fair value gap, right? So let's say you want to look for a 4-hour fair value gap, trade from the fair value gap, and then look for a confirmation on 15 minutes, for example. So your fair value gap is going to be, and your high probability one actually, is going to be drawn or identified in the 4-hour time frame. What we're going to be doing is going to the daily time frame first. So the first step is go with the daily time frame, and that's what we're going to be doing. So simply starting from any point near the price action, but in this case, I'm going to go from here just to show you how we can actually approach this. Now, one thing here, make sure that you look at the overlapping of fair value gaps with any other PD array. So you see here, you have this high overlapping with the fair value gap, and those highs are what? Breaker block or mitigation block on the lower time frame. So they're still significant when it comes to price action, and those are levels that I called months ago in the Discord before they happen. And you see here, really a sniper entry from this level. So let's forget about this for now, but make sure to look at those overlapping sometimes because they're really significant. Now we have this fair value gap here on the daily time frame. We have also one here, daily time frame. Again, as we're going up, there is no fair value gap. So there's this bearish one as well as this bullish one, but price, did not come back to it in a while. So let's say we take this fair value gap here. That's a clear one after liquidity sweep. Also look at those. So fair value gap should have a liquidity sweep in order to be validated or another mitigation of a fair value gap. But let's focus on some fair value gaps that are clear in order to learn a lesson from them. So you see fair value gap here, another one here, bearish one, no fair value gaps here. There is this small one here, and simply doesn't look like it was respected. So this is a fair value gap here, no fair value gap here. As we're going higher, there was this one that clearly had to be inversed after this liquidity level taken. We have this fair value gap here, and we also have this one, as well as the last one that we're having is right here. So this is the current price action in euro dollar. Now those are your daily fair value gaps. You could have drawn more, but I don't want to draw all of the fair value gaps that are unnecessary. I want to make it clear and short. So this is your daily fair value gap. Now you're going to go to 4 hour, which is a time frame that you want to trade off the fair value gaps. And this is where you're going to look for fair value gaps on the 4 hour that are high probability. They're going to be inside of those daily fair value gaps. Okay, so simply you're going to be trading off a higher time frame PD array. Taking a look at this, what do we see here? Simply you ask yourself this question: oh, do we have? And always look at the extreme one with the overlapping. So on the 4 hour, what do we see? This is your daily fair value gap. On the 4 hour, we actually have this fair value gap here, and we have this main one. We could adjust this to the 4 hour fair value gap now, because we know that we are actually trading off a daily fair value gap. And you ask yourself this question: if it's a big fair value gap, do we have an overlapping here? If the answer is yes, mark the overlapping. In this case, it's this from the body or the high. That's your overlapping. That's where price came to, started going higher. So that's your high probability fair value gap. Now what's the reason? The first one is that it's in a daily fair value gap, which is a higher time frame to the 4 hour. The other reason is that it has this overlapping high, which is again a mitigation or breaker block on the lower time frame inside of the main fair value gap. That's where price respected this going higher. Now again, the same question here. What do we have here? We have this big fair value gap, actually two fair value gaps inside of the daily fair value gap. Actually, the main one is this one below, because the first reason is that it's the extreme. The second one, you're going to see it now. So this is your main fair value gap. What is the second reason? Is that we have some overlapping. The first one is here, and then the second one is here. Those are highs, again, breaker blocks or mitigation blocks inside of the daily and the 4 hour fair value gap. In this case, we will find this to the 4 hour, which is now the extreme fair value gap. And you see, where did the price react from? The first time is sniper entry here, going higher, and then where? Sniper entry again, going higher. That's a fair value gap that we could have been trading from. Now take a look at this. This was also a daily fair value gap. You see, this was a wick, so it was not part of a fair value gap. There is no fair value gap here. There is only one here, and there is this one that was just way below, even before the fair value gap is created. So the main fair value gap is this one actually. So I could have adjusted this just like this, and that's our high probability fair value gap. Simply, it was not respected here. Exactly, we broke above it and we came lower. If we had a confirmation, it's going to be a losing trade. If there is no confirmation, then it's not going to be a trade. Now again, the same thing to this daily fair value gap. We ask ourselves this question: do we have a 4 hour fair value gap here? We have this small fair value gap all the way here, but this one is more significant, even though this is the extreme fair value gap, but that's not where the real displacement happened. It's this one. So we're going to adjust this to our 4 hour fair value gap, and then ask yourself this question: do we have an overlapping here? There is one, but it's not that obvious, which is this pullback, this low inside of the fair value gap, because we broke through it. And again, where did price react from? Again, those levels here, exactly at the low overlapping and the low overlapping. Again, inside of the where? 4 hour fair value gap, inside of the daily. We take a look at this again. That's our daily fair value gap. Now, take a look at this. We have one fair value gap here, no fair value gap here, one here. Again, you ask yourself this question. Now, this had a displacement. So it's not the first example, where the first candle or the first fair value gap had no displacement. This one actually had a displacement, so we could have went with both. So the first one would be right here, and then the second one would be the second one. But mainly, I focus more on the extreme, so I'd be ignoring everything in here, and I'll be looking for this one with overlapping. Where do we have the overlapping? One is here, and a second one is here. Those are the overlapping, and that's where price actually reacted on the fair value gap. That's a whole process of actually identifying the high probability fair value gaps, especially the overlapping and the higher time frame confluence. So you see, this was our fair value gap on the 4-hour, part of the daily fair value gap. We keep going. This is a daily fair value gap, but on the 4-hour, where do we see it? We can see that this was the fair value gap on the 4-hour. Now, this one was not the extreme fair value gap. So if we had already a liquidity sweep here at the end of the range, then that's not going to be valid. It's simply an inverse fair value gap. But still, for the sake of the video, I want to go over all of those fair value gaps. Now, again, this is a daily fair value gap. The same question is, do we have a 4-hour fair value gap inside of it? Yes. So adjusting this, just like this, that's your 4-hour fair value gap. Where do we have the overlapping? We have one here, and that's where the first reaction happened, going all the way lower, and then price started going higher. Do we have another overlapping inside of the fair value gap? Yes, that's the one. So 2 times price came back to the fair value gap, and both of the times we had a very nice displacement to the lower side. Again, another fair value gap here on the daily. We adjusted it to the 4-hour, and that's our 4-hour fair value gap. Price started going inside of the fair value gap, started going lower. Another one here, and that's a daily fair value gap. Now here's the question. This is a daily fair value gap. Do we have a 4-hour inside of it? Yes, we actually have this one. However, this is already fully rebalanced, so there is no reason to trade this. We're not going to be trading this. We're not going to be trading this daily fair value gap. And you see what happened here? Price just broke through it. It's like nothing. So that's how we actually approach fair value gaps, the high probability ones, and we look at the overlapping inside of those. If you just follow this, you're going to be less confused, less overwhelmed from the big number of fair value gaps that you see on your chart. It's going to actually filter out and refine a lot of the bad fair value gaps. This is it for the video. Hopefully you guys learned something new. Hopefully you use this method in order to filter out the bad fair value gaps and only focus on the high probability ones. If there is a topic that you want me to talk about, write it in the comments. This is Mulham, and I'll see you in the next video.